capital market secondary. Previous chapter was capital market primary, market for the first issue. So there we had seen public issue, right issue, private placement, different types of private placement. Where in primary market the transaction is between investor and the issuing company. It gives funds to the issuing company. Investor get the security from the company, the issuer. And then we had seen several SEBI guidelines on different aspects. Now a more interesting chapter will be secondary market, means stock market. The students are always interested in knowing how the stock market dealings are done. So you will also understand the procedure in detail, how the stock market is functioning, and you can also start trading in the stock market after this chapter. Okay, you will learn how the index calculations are done. What are the benefits of stock market? What are the different stock exchanges in India, outside India? How do they function? What are their various important features? All this we will cover in this chapter. Okay. So what is secondary market? Secondary market is a market where shares initially issued are traded. Market for the first issue is called primary market, where company sells shares to the investor. But once the shares are sold to the investor, now the investor will trade among themselves. So when one investor sells to another investor, then that transaction takes place in the market known as secondary market. Does the company receive fund here? No. Does the investor get shares from the company? No. It is a transaction between investor and investor. So there must be a place, a platform where these investors can buy and sell securities, and that place is called secondary market, also called stock exchange. Okay, so trading of security takes place when securities are purchased or sold. So one will buy, the other would sell, and this market where these securities are traded is popularly known as stock market or stock exchange. Okay, in India, secondary market consists of recognized stock exchange operating under rules and regulations and guidelines approved by the government. So to protect the interest of the investors, there are rules and regulations. So you have a central government, you have SEBI, then Companies Act, Security Contract Regulation Act, and you have regulation of the respective stock exchange also. That is, each stock has its own bylaws. That is, rules and regulations which the different parties in the stock exchange will have to follow if he wants to trade through that stock exchange. Okay. So why these regulations are there? To protect the overall interest of the different stakeholders in the security market. Then the people will have confidence. Which is this building? Huh? National Stock Exchange or Bombay Stock Exchange? Bombay Stock Exchange. Very good. Have you ever gone? You've not gone to Bombay or Mumbai. You've gone but not gone to this place. Okay. It is on Dalal Street. Once I had gone inside also, on this 24th floor place also. Why? Because we had a seminar there. The stock exchange are organized market where securities issued by companies. Even public sector companies can issue shares. So central and state government and public bodies are traded. So what is a stock exchange as per section 2J of SCRA? So if when you will read this act in your law syllabus, SCRA, there also you will come across this definition of stock exchange. So as per the definition given in the act, security exchange or stock exchange means any body of individuals, whether incorporated or not, constituted for the purpose of assisting, regulating or controlling the business of buying, selling or dealing in securities. Any body or person, whether incorporated or not, constituted for the purpose of assisting, regulating or controlling the business of buying and selling or dealing in securities, then it is a stock exchange. Okay. Therefore, in nutshell, the definition can be summarized as security issued by a company for the first time are offered to the public in the primary market, and once the IPO is done and the stock is listed, they are traded in the secondary market. And this market, as per this definition, is called stock exchange. Okay. If they ask you definition as per the Security Contract Regulation Act, then this you have to write. Next is, what is the main difference between primary market and secondary market? Already discussed in the previous chapter also. Once again, in the primary market, an investor gets security from the company through the IPO. Whereas in the secondary market, one purchases security from other investor willing to sell the same. So in the secondary market, you can trade in equity share, you can trade in bonds, you can trade in preference share, debenture, etc. are some of the key products available for trading in the secondary. Who receives money? Investor. Who issues security or transfer security? Investor. Company does not get funds. Then what is the point of having a stock market if company does not get the funds? People will invest in IPO only if there is a liquidity in the share. There is an exit route, easy exit route, and there is a market where there is a continuous price formation. Okay. Secondary market provides a place where there is a continuous price discovery, liquidity, marketability, and hence secondary market is also required. Otherwise, primary market will not grow. One question is now, functions of secondary market. Functions of secondary market, or in short, what does stock market do? What is the benefit of stock market? First is economic indicator. If there is a growth in the productivity, means company's profits are increasing. If company's profits are increasing, share prices will rise. So many times it is said that stock market is a barometer of economic performance of a country. It is an overstatement because stock market deals with only a limited number of shares. It does not take into account other activities like agriculture or services, etc. But still, stock market performance is an indicator of or barometer of performance of the nation. If the stock market is rising, we can say, oh, there is a positive trend in the economy. There is growth. Okay. More output is taking place. One reason why security market is very important, it helps in valuation of security. Every day lakhs of people are participating in buying and selling of securities. Okay. So there is a continuous demand and continuous supply. So since more and more people, lakhs of people in India, crores of people are buying and selling the securities, the value of the security is more appropriately, accurately determined. Okay. So those companies whose demand is high, their price will rise. Those whose demand is low, their prices will fall. So investors are very smart community. they know what price they should give for a particular share. Okay. So consequently, the price of growth companies are high, price of companies which are not doing well are low. Transaction in securities is safe in the secondary market. If you trade through stock exchange, your transaction is safe. You will receive the security in your demat account in 2 days, 2 working days. T plus 2. Transaction date is Monday. So on Wednesday, security will definitely come to your demat account. If you have sold the share, then in 2 working days, that money will definitely come to your bank account. If you do transaction outside the stock exchange, then I can't assure. Okay. That is why it is always suggested that you should trade through recognized stock exchange, so that your transaction is safe, secure. You are assured that you will get the delivery of share or you will receive the payment. Security market, secondary market helps in economic growth. Why? Because those who have the money to save will give it to those who need the fund. That takes place in the primary market, but this happens because there is a secondary market where the investor can later on, if required, liquidate their shares. If there was no secondary market, many people will not invest their savings in the primary market also. So money will not flow from area of surplus to the area of deficit. Okay. Even government can use secondary market for disinvestment purpose. Okay. So secondary market basically helps in capital formation and growth. And then next is for you, motivating people to invest in equity share. Equity market is a place where wealth is created. Yes or no? Equity market is a place, security market or stock market is a place where wealth is created. Of course, wealth is destroyed also. But then, positively thinking, it provides a place where we can invest our money and become wealthier. Transaction is safe. Okay, as far as execution of transaction part is considered, that is safe. Of course, the share market as such is risky because prices can rise or prices can fall. But with respect to the trading aspect, you are mentally comfortable that once I place an order, it will be executed in 2 days. Either I will receive the share or I will receive the funds. And then point number 6, it ensures safety and measure of fair dealing to protect the investors. So that is why more and more investors participate through stock market, because there is a set of regulation which everybody has to follow. There is a fair dealing, there is SEBI, there are regulation. Shares which are listed on the stock exchange, you have lot of information available about that company. Their annual reports are public. Okay, their working is public, their profit and balance sheet is public. So therefore you can understand their performance and take a more informed decision. So these are some of the benefits of secondary market. Now, development of the stock market in India. So there is a small history of stock market we will now see. How in India the stock market has grown. Point number A. Point number A. The stock market originated in India at the end of 18th century. The stock market originated in India at the end of 18th century. So the history starts from 18th century. In some country, the stock market trading started somewhere in 17th century also. when lots of new negotiable instruments were introduced. But that time it was not on a very mass scale or a grand scale. The real beginning was made in the middle of the 19th century when Companies Act 1860, have you ever heard? Britishers had brought Companies Act 1860 was enacted where the concept of limited liability was introduced. For your general knowledge, the Bombay Stock Exchange was originally formed in 1875. That time it had a different name, which I am going to tell you later. Bombay Stock Exchange, which you see now, is actually from 1875. A small group of brokers, they came together and they formed an association, okay, under the name like Association of Brokers, and then trading at small scale started, and this was followed by exchanges in Ahmedabad 1894 and Calcutta, which is now called Kolkata, in 1900s, and Madras, now it is called Chennai Express in 1937. So first is Bombay, Ahmedabad, Kolkata, Chennai. Okay. Kolkata Stock Exchange CSE was the largest stock exchange in India till 1960. Okay, so that is a news for you. But then over a period of time, the other stock exchanges have now become very, very less important, and only two stock exchanges are relevant now. So in 1961, how many companies were listed? 1203. 576 were listed in CSE and 297 in BSE. However, the later part of 1960s saw a significant decline in the shares of CSE, but the share of BSE gained during this period. So after that period, BSE became like a leader in the stock exchange. Then there is a table given to you. You don't have to take any efforts to remember them. Okay, just for understanding the topic, how the stock exchanges in India have grown. So they have given the history from 1946 to 2012-13. 99 2000, there is a problem. This number, okay, don't go there. I need to check why there is a why there is a some company might have got delisted. I don't know. I have to check why 1100 companies got delisted. But this statistic is given by the institute. First of all, I have to check whether this is right or not. Yes, the turnover from this to this is also quite big. From this to this, there is a huge decline. And plus this figure is also not properly printed. So what you do, don't take tension. Who is going to ask you what was the turnover in 1990, 91? Are they going to ask you? This is just for understanding that over a period of time, the number of stock exchanges have increased. The number of listed companies have increased. Yes, there is a major reduction here because we have to find out the reason, but maybe they were got delisted. So right now we have a little above 5,000 listed companies. This number keeps on changing. Many times they are removed from the listing also. Okay, but your question on this point, we have to just find out why it has happened. Right now I don't have any answer. Why so many companies got reduced? Maybe the data may not be wrong. It may be 5 instead of 4. But this is how right now the institute has given. Source write down ICI. Study material. So I can pass the blame on them. Okay. So the purpose of just putting this table to you before you is that in the last 40 to 50 years, the number of listed companies have increased and now it is close to 5,000. If you see, the market capitalization is also increasing. Just remember, don't bother about the exact number, but it has been increasing. The turnover has also been increasing. Now your question can be how the turnover has increased so much. Okay, there's a huge increase in turnover. Then your question will be why it has decreased. You have to read the entire history of stock exchange in that case. But I will try to see whether this data is properly given or not. But you don't worry about it right now. From the exam point of view and in general understanding point of view, do not take tension about it. What is the next task? What are the drawbacks of the Indian stock market? Why Indian stock market has not gained that kind of popularity like New York Stock Exchange or Singapore Stock Exchange or London Stock Exchange, even though it's a big country. Till 1990s, Indian stock market was suffering from many drawbacks. Uncertainty of execution price. At that time, technology was not used. Pre 1990 era was very little use of technology. Even the brokers used to meet physically in the well of the stock exchange and they used to shout, and then the contract note was prepared there. There was uncertain delivery and settlement period, lack of transparency, high transaction cost because government used to charge you stamp duty also, postage, courier. Companies used to charge share transfer fees. Brokerage was high. Then absence of risk management. Systematic failure of market due to market failure. Instead of writing a lot of scams and corruption, this is a diplomatic way of saying market failure. Okay. Don't write scam, corruption. Partiality of broker to certain client only. Brokers were manipulating the market. Okay. Circular trading was done. What is circular trading? I'll just for general knowledge. They will first list a company, okay, at 15 rupees. Then some group of brokers, they will trade among themselves only. So one group of broker will sell to other at same share at 25. Then after that 28, 30, 40, 45, 60, 75. Who is doing the transaction? Only 5 of us. A, B, C, D, we are 5 brokers, we are selling to each other. The next time they are selling at a higher price. Within few months, the share which was 15 rupees becomes 75, 5 times more. Now they will sell it to public. Public will think, oh, this is a great company from 15 to 75 in 1 year. 500% return. So then more and more people will get attracted, and then what they will do, they will offload all these shares to general public. And then the public will suffer the loss because this is not worth 75 rupees share, but it was artificially through circular trading among the group of brokers and group of few people, the prices were rigged. Okay, and there was no software etc to check what is actually happening. So that time people used to say it is very risky to invest in the stock market. Most people would prefer to invest in bank FD, government security, nearby post office saving account or post office deposit account. That is what all people used to do. They will not take the exposure to the stock market. Only very high risk takers, they would enter the stock market. But then 1991, when reforms began, even lot of reforms have taken place in the stock exchanges also. One stock exchange have really changed the rule of the game in India, and that was NSE. Because NSE was the first electronic trading based stock exchange. It was first electronic trading based. It has opened terminals all over the country. It has given power in the hands of people. Okay. Trading became faster. From many weeks to few days and then to 2 days, settlement was done. Okay. Speed increased. Then they brought this dematerialization. So all physical movement of share certificate came to an end. So regional stock exchanges were started like NSE, BSE. For small company, OTCI, over the counter exchange of India. Interconnected stock exchange of India. So this stock exchanges started. NSE was set up in 1995. We'll discuss these exchanges also somewhere. It was the first stock exchange in India to bring new technology, new trading practices and new institutions and new products. Because of NSE, the future trading started. Online trading started. Okay, demat trading started. Many malpractices were eliminated because of technology. Then over the counter exchange of India, OTCI, was established in 1992. This is providing a platform to small and medium enterprises to generate the capital. So this small and medium enterprises can be listed there and they can raise funds here. OTCI will discuss in a separate segment of this chapter or maybe the next chapter. Metropolitan Stock Exchange of India Limited, MSEI, formerly known as MCX Stock Exchange Limited, is recognized by the country's security market regulator SEBI. It offers an electronic platform for capital market, future and option, currency derivative, interest rate future and debt market segment. So that is called Metropolitan Stock Exchange of India Limited. So now you can do any kind of financial products trading now. You should also do it. Okay. MSEI's current shareholders include, who are the people who promoted this? Indian public sector banks, private sector bank, investors and domestic financial institutions. Next is stock market organization in India. Now you see there is a small chart given to you below where we will discuss how the overall stock market is organized. Who are the stakeholders or participants here? So stock market organization in India. There is a stock broking, custodial service and depository system. Then under stock broking you have a broker broking. Sometime under that there is a sub broking. Then clearing, trading and members. That means those who work in the background. Okay, like once you place an order and the order is executed, they take the responsibility of collecting the share, making the payment. They do that order matching, etc. Even though there is software, but human intervention is there and somebody has to be there to ensure that the transactions are settled smoothly. So that is a function of clearing members. And there are foreign broker houses also now in India. Trading and clearing members of currency derivative segment. So these are the people who help in stock market trading. Then depository system works through depository. They maintain the records of shares in demat form. There are two recognized depositories in India, CDSL, NSDL. What is CDSL? Central Depository Services India Limited, NSDL, National Securities Depository Limited. They do not directly deal with the investor, they deal through depository participants. Depository participants are agents of this. So you open a demat account with a depository participant. Okay. Who are the agents or members of depository? And then you also open a bank account with a bank. Unless you have a bank account and a demat account, can you trade in the shares? No, you can't buy in cash. So those who are interested in cash, you can't. Okay. So how many of you have demat account? Demat account? Okay. Very few students. Okay. That means you are more focused on studies. That's good. So those who don't have, their probability of coming into merit list is very high. And those who have, you are a certain merit holder. Now next is stock broking. Stock broking. Brokers are the members of stock exchange. Based on your limited general knowledge, you know you can't do the trading directly. You have to always do the trading through brokers who are the members of the stock exchange. They enter into share trading transactions either on their own account or on behalf of their clients. Of course, they can do trading on their own for their own self. But if you want to purchase a share, then you have to call your broker. Of course, nowadays online trading is available, so you don't have to call the broker. But there are still a lot of people who call their broker and say, you purchase this share, this many quantities at this rate, etc. Okay. They have to get registration from SEBI to protect the interest of the investors. Anybody wants to become broker will get themselves registered from SEBI before starting their operation and have to comply with the prescribed code of conduct. So all the brokers that you see around you, check whether they have got this SEBI registration number or not. Till recently, most of the brokers work as proprietary or partnership concern. So who can be a broker? A proprietor, partnership firm. However, now many top broking firms are company form of organizations. But because there are a lot of people in India who are now trading in shares, it has become a very popular business now to provide broking services. And you will see some names are written. These are the corporates who have entered into share broking. Sher Khan Limited. What a wonderful ad. Sher Khan. India Bulls. Angel Broking Limited. India Infoline Limited. Reliance Money. Kotak Securities. ICICI Direct. Motilal Oswal. HDFC Securities. Bajaj Capital. Where is your demat account? Your dad himself is a broker. Oh, so your own in-house broking house. Don't ask me. Brokers are important intermediaries in their stock market as they bring buyers and sellers together. What is the benefit of having brokers? You are sitting in Pune, somebody is sitting in Vijayawada. How do they buy or sell the security? So this broker and that broker, they will help in bringing the parties together through stock exchange. Okay. What about the brokerage? How much do they charge? How much do you charge? You don't know. You come to my office and I will let you know. Okay. Maximum brokerage you can charge is 2.5% of the contract. But now because competition has increased so much in this field, they say 5paisa.com. For every transaction they charge you 5-10 paisa only. I don't know how does it work, but it varies now. Very small up to 2.5%. Further, every stockbroker should appoint a compliance officer to monitor the compliance of SEBI Act and its various rules, regulations and guidelines, and also for redressal of investor grievances. So you have to appoint a compliance officer. You have to ensure that investors' grievances are taken care of. Okay. Any query? Next paragraph. Compliance officer should immediately report any non-compliance observed by him to the SEBI. These are all procedural formalities you have to perform as a broker. SEBI is also empowered to appoint one or more persons as inspector to inspect the books of account, other records and documents of the stockbroker. So SEBI can appoint inspector also. They can come check whether you are maintaining proper books of account records. Also, a stockbroker shall only deal with any person as a sub-broker only if he has obtained a certificate of registration from SEBI. So sub-broker also has to take certificate of registration, and only with this kind of sub-brokers you can deal. Further, stockbroker or sub-broker who has contravened any provisions of the SEBI Act, rules, regulations are liable to penal actions. Why the institute has written all this? Because you may have an interest in becoming broker. One person has already become, others will also be interested. Remember, you have to comply with lot of regulations here also, and any violation of regulation will attract penalty. Then custodial services. What is the meaning of custody? Safekeeping. Keep my mobile with you means keep my mobile in your custody. Of course, you have to return it back to me. Okay. Similarly, in case of security market, you have lot of securities where you get physical certificate, documentation. Okay. So in that case, you can appoint a custodian, and then the custodian will keep safe custody of your securities. Whatever documents etc. are there, they will keep a safe custody. Because of dematerialization, you may not require a custodial service in some cases, but then they perform other services also. Are custodians also required to be registered with SEBI? So SEBI Custodian of Security Regulation 1996 was framed for the proper conduct of their business. My goodness, how many regulations we have to study? SEBI Custodian of Security Regulation 1996. According to SEBI regulation, custodial service in relation to security of a client, or a gold or gold related instrument held by a mutual fund or a title deed of real estate asset held by a real estate mutual fund. What is a real estate mutual fund? They invest in real estate. Gold mutual fund, they invest in gold. Now, when they invest in real estate, you get the property related document. Okay. So then what this custodian has to do, it means safekeeping of such security or gold related instrument or title deed of real estate and providing the related services. That is the role of custodian. They have to keep the securities, gold related instrument, or in case of real estate mutual fund, that title deed of the real estate asset. What are the services provided by the custodian? Maintaining accounts of the securities of a client. Because sometimes the client may have hundreds of securities, thousands of securities. Okay. Then collecting the benefits rights accruing to the client in respect of securities. So they also take the responsibility of collection of dividend, interest, etc., keeping the client informed about the action taken by the issuer of the security. So if there is a right issue, bonus issue, okay, you have to inform them. Mergers, acquisitions, maintaining and reconciling records of the services as referred above. Now there is next 4 paragraphs deal with SEBI and custodian. How SEBI monitors the custodian. SEBI can ask for information from the custodian in regard to his activity. Okay. SEBI is the boss. It can ask the custodian any information that it wants. Such information has to be given within the specified time frame. SEBI is also empowered to conduct inspection, investigation, including audit of books of account, records, etc. of custodian to ensure that they are being properly maintained. The usual function of SEBI: monitoring, inspecting, okay, investigating, ensuring that books of accounts are properly maintained. SEBI's task is also to ascertain that compliance of provisions of SEBI Act and its regulations have been duly complied with. Moreover, his job is also to investigate into complaints received from the investor or clients. So this custodian has to ensure that any complaint received from investor or the clients are taken care of. Okay. Now one big discussion on depository system. Only because of depository the DMATs have started, and because of DMAT secondary market have flourished, right? So what is depository system? This is one of the major reforms, you can say, post 1991. Introduction of depository system into India and DMAT accounting. And that is why you can see the numbers have jumped in the last few years. As far as the market capitalization of the stock exchange is concerned, it has gone into several trillions of rupees. So what is the major reform in the stock market, if you ask? That is the DMAT system. And for that we require depository system and scriptless trading mechanism. Scriptless means no physical certificate now. Certificate is in electronic form. You don't have to transfer physical certificate, take a stamp, put it at the back, sign, send, again receive. Depository Act was passed in 1996 to provide further fillip to the process. The issuer should enter into an agreement with the depository to enable the investor to dematerialize the securities. So the company and the depository will enter into an agreement. Okay. Before the depository system came into being, the market suffered from various drawbacks, which we discussed in one earlier chapter also. When you have a physical share certificate, there is a possibility of theft also, forgery also, loss also. Okay. In rain, it may get damaged also. Blank transfer also, which they have not written. Huge scope of generating black money. One person may just transfer it to other without routing it through the company, raise the money. Next person will again transfer it to the third person. So they save on stamp duty, they save on income tax. Moreover, dealing in physical mode had its own limitation which inhibited the growth of capital market in it. So it used to take a lot of time. 30 to 45 days it was required for completing one cycle. Yes or no? Because first you have to send it to the company. Company will again check it, send it back to you. Company secretaries were overburdened with transfers. Lakhs of transfer used to come to their offices. So there was a delay. Sign will not match again, he will send it back to you. All this problem. In courier, you may lose the certificate. Courier may delay the dispatch, etc. Now, these shortcomings were accurately felt more so after the liberalization. So, central government has enacted Depository Act retrospectively with effect from September 20, 1995. Now, there is a question on the screen for you. Is, some previous slide you want to write? What you want to write? Oh, okay, I hope you have understood, written whatever you wanted to write. Next is question for you. Is it compulsory for every investor to hold security in the demat form? Yes or no? If you want to trade on the stock exchange, then the answer is yes. Okay. So Depository Act provides that every person subscribing to securities offered by an issuer, underline, has the option to receive the security certificate or hold security with a deposit, which means it is not compulsory. You can demand physical share certificate, but then you cannot trade on the stock exchange. So your share will become illiquid in that. Some of the promoters hold their shares in physical form only, because they say that we don't have to trade. If you don't have to trade, what is the point in having it in the demat form? Why to pay demat charges every year? Anyway, that is a small amount. But in case if you don't want to trade only, then they may say that we don't want to keep it in the demat form. However, investors need to note that while securities can be held by way of certificates, underline, dealing in the market is permitted only if the securities are in demat form. Otherwise, your shares will become illiquid if you keep in the physical form. Then you can't transfer it. Through the stock exchange, you can't transfer. So then it means you restrict yourself from trading. Okay. Next is when the investor holds security in the physical form. Suppose you want a physical share certificate. Okay. Then that certificate will give you serial number of that certificate, the number of shares held by you, etc. But if you are holding the security in a demat form, electronic form, there is no number. It is like keeping a money in a bank account. When you have a bank passbook, you have money in that account. When you have a demat account, you have shares in that account. When you buy the shares, it gets credited or recorded in that account. When you sell the shares, it goes out of that account. It is as simple as this. Okay. Therefore, there is no question of certificate number or distinct number, though the quantity will remain the same. Now, next question for you on the screen. Can beneficial owners create or pledge or hypothecate in respect of the securities held by them in the demat mode? Is pledge hypothecation allowed even if the securities are in demat form? Can you take loan against the securities in the demat form? Yes, you can. As in the case of certificates, holders of securities in demat mode. Holders of securities in demat mode are called beneficial owners. Underline for an MCQ question. Holders of the security in demat mode is called beneficial owner, can create or pledge or hypothecate in respect of the security held by them. But what is the procedure? In this case, it is necessary for the beneficial owner to inform the depository of the pledge or hypothecation created by him. The depository concerned has to make a noting in its record to that effect, that these shares have been hypothecated or pledged. And then you cannot do trading in that share. Okay, have you noted? So the question is, you can pledge or hypothecate. Yes, you have to inform the depository. Depository will make a note of that. One more question for you, only on the screen. Can the investor who has opted for holding the security in demat form ask for certificates on opting out of the depository? Can I move from demat to physical form? Allowed or not? Allowed. Okay, there is a form which you have to fill, that is called rematerialization form. Opposite of dematerialization is rematerialization. But then the limitation I have told you, once it is converted into physical form, you cannot trade in those shares in the stock exchange. Okay, so you can opt out. In fact, the depository has to note the request in its record and also convey the same to the company. Once the company gets the information that you want the physical certificate, then within 30 days, the company will issue the certificate. Of course, some charges may be levied upon you. So within 30 days, the certificate will be issued. Question for you: when can and what can an investor do if the depository or any participant or an issuer fails to redress his grievances? Go to police or go to SEBI? Not police, not to Arvind Kejriwal, not to Mayawati. Complaint should be lodged with SEBI, giving the necessary particulars in the prescribed form. So then SEBI will take a stick and then it will hit that particular entity, depository or depository participant or the issuer. SEBI would write to the concerned party asking it to redress the grievances in a specified time. In exceptional circumstances, SEBI may grant further time for redressing the grievances. But after giving time and again some more time, the depository or the participant indulgence in dilatory tactics. Sir, what is dilatory tactics? Delaying tactics, right? Delaying. If you can't remember this word or understand, delaying. Okay. Delaying means they will say, okay, tomorrow, day after tomorrow, next week. The investor is running from pillar to post, but his problem is not getting rectified. Then what the SEBI will do? SEBI has the power to proceed against such defaulting party and impose the penalty. Right? So you can always complain to the SEBI in case if you have any problem, or just threaten them that I will go to SEBI, and you'll find your work has been done. Okay. Just like if your boss does not give you leave, you say, I'm going to complain to ICI that you are asking me to do household work outside the office hours, and you'll get one more month of leave, 10% hike in the stipend. ICI will respond. I have tried all these techniques and I know it works. Not related to household work, but other techniques have worked. Is it right? Next line. In fact, SEBI has come down heavily on various market intermediaries, as also the defaulting companies which ignore the investor and fail to redress their grievances. So is SEBI doing a good work? So you will say yes. Okay. Because investor faith, confidence needs to be maintained in a system. This whole stock market is a system. Otherwise, people will not invest, people will not buy shares, and then company can't raise funds from the public. So therefore, investors' confidence can be boosted only if necessary actions are taken by SEBI, and the penalty is also heavy by SEBI. Okay, so once they put penalty on one person, others will also understand the lesson. Okay, now we will take a break.